What's up traders, Tom here with another video. Today we'll be looking at the stock market and the risk-off sentiment that is currently emerging. We'll also be taking a look at our thoughts on the S&P 500 technically, along with our thoughts on the dollar index, VIX and more. This one cannot be missed. Stay tuned. So the stock market futures are certainly looking pretty bad at this point. There's a sea of red, and one of the biggest green things is of course the VIX. So the VIX has hovered between just under and just over 40 today and is up between 12 and 15% in terms of volatility, and volatility is fear. Even gold isn't safe, with gold being down and crude getting smashed throughout the day and then picked back up recently as well, ahead of the pre-market. Before we get started talking about our technical thoughts, I just wanted to let everybody know that we are planning on doing a few things with this channel moving forward. One of the things that we wanted to do is, we know times are tough for many, so we're going to be giving away 500 Australian dollars to one lucky winner to put towards their trading account and hopefully use it to make more money in the future. And we'll be doing that on our road to reach 20,000 subscribers. All you're going to have to do is be a subscriber and hopefully follow us on one of our social media platforms, whether it be Discord, Instagram, or Facebook. The prize will then be uploaded once the channel hits 20,000, and we'll of course send it to the lucky winner after contacting them. We also have some more plans for this channel, and one of those is that we want to take all of the ad revenue that we earn on this channel, disclose it and talk about it, and then invest it in indices and other things in the stock market. We're then going to use that as a case to show people how you can put a little bit of money aside over time and build it to something big. So I think it's going to be incredibly exciting. But where it gets even better is that every time we make $10,000, we're going to be giving away a percentage of that to charities that the community is going to pick and help us choose which ones are most deserving. And we're also going to give a percentage away to lucky subscribers of this channel. I think it's something really different. I think it's something super exciting, and I'm really keen to do it because I want to show everybody that there doesn't necessarily have to be a crazy system to making wealth. It just has to be about consistency and sticking to a plan. So hopefully everybody's enjoying that. Make sure to give us a thumbs up, support the channel, and of course subscribe and hit that bell if you haven't already. Let's talk about what's happening in terms of the Wall Street gurus. So all of them right now are pretty much telling us to buy the market and double downing on the V-shaped global recovery. Morgan Stanley has in fact said that they're doubling down on the V-shape and that they're all in on this rally and this concept. But what is the market telling us right now? Well, if I'd shot this video about an hour before, it would actually be a lot more bearish than it currently is. But we're still down around 1% on the Nasdaq pre-market coming into the US. And that's off all of the concerns and fears that we've been seeing recently. Let's talk about our thoughts though technically at what's currently happening. So one of the things I want to mention straight away is that we have this red line here, which is the 20 exponential moving average. And if you do not have that on your charts, you need to have it on, and you need to pay attention to this one, especially on the daily. Look at how the market interacts with this 20 moving average over time. It acts as dynamic support and dynamic resistance all over the place, and the 20 is probably one of the best moving averages that you can have on your charts. So first off, where are we in terms of the Nasdaq? Well, this is the futures of the Nasdaq, and we are just underneath the 20 moving average. We need to see a close under that, but notice how there has not been a close under the 20 moving average for a long time. And the last time we saw a close above the 20 moving average signaled a very large bull run on the Nasdaq. So today will be pivotal in what we end up seeing over time. Another thing I want to note is that the histogram on the MACD has been lowering and the signal line is now above it. We're seeing some weakness coming in, and that's of course showing the price action. So let's drill down on the 4 hour here. And I just want to show you again something that I think is very interesting pre-market. We want to see it in the real market, but it's happening pre-market. 20-50 moving average cross. So the last time we saw that is in the 3rd of April, where the 20 has not crossed below the 50 since then. So we've seen a massive bullish run with no pullbacks where this signal has been given. The market has moved down and it's now hit the 200 moving average on the 4-hour, and the histogram has been slowly getting larger to the downside here, which is important in terms of sentiment and what's happening with the market. But it's very interesting that the cross has happened here on the futures, and we'll have to see whether that holds on the real market. Another thing I want to point out was we're a big believer of change of trend based on price action on this channel. So we had a peak, we had a trough, we had a lower peak, and then that has become now a lower trough. And a lower trough signals a change of trend on this 4-hour chart. Again, we want to see it in the Nasdaq charts itself, and we'll be covering that in the channel tomorrow. But this is very significant in terms of change of trends. Where to though for the Nasdaq? A lot of people will ask. Well, one of the things that we're looking at is that we have generally seen when markets have gone this aggressive movement, and there is some reason and underpinning of the market, which currently is, of course, the Federal Reserve, that the market will dip to a 38.2 fib. And we've talked about this several times on this channel. So make sure if you're a new subscriber or you're a new member of the channel, go watch some of our back history and see that we've been talking about this. So if the market was to dip to the 38.2 fib of the whole move, it would be around 8,800. And that would be in line with previous resistances that would therefore become support. So very key level on the Nasdaq, and something for you to certainly be setting your alerts to. The next thing I want to talk about is the VIX, of course, or the Volatility or Fear Index. So we've seen a massive spike in that off the close of last week and the open now pre-market. We're seeing about 40 right now in terms of where the VIX is, and it was trading even higher before. Now, if the VIX gets above this 44, expect it to become slightly more explosive and potentially even hit upwards of 50, because the nature is when the VIX blows through a level, it often does so incredibly aggressively. It can also become trapped though, so we want to see it get above that level, and at the same time you will be seeing volatility coming into all of the indices. So a lot of people are probably asking, what about the S&P 500? Well, let's cover the S&P 500 and a few others now. So one of the things that we like to see with the S&P 500 is we want to see that the MACD has been crossing to the positive in terms of the histogram here, and that has not happened yet on the weekly S&P 500. This is the real market, so you'll see the candle is a little bit different. Hasn't happened yet, it has not crossed, and it's incredibly significant because if we go through time, look at what happens when it generally crosses. We see quite big bullish momentum. Usually it crosses by quite a significant amount, and it has not done so here, which was the double bottom, where the market went a little bit lower. And all the way through this time, notice how the MACD gets close, then fails, and then it ends up continuing weakness. So the MACD doesn't actually go negative as often as people think on the weekly. And it did so here, but notice how it has not come above that zero for a very long time. And significant here is that it did not get above the zero before the bearish sentiment came back into the market. The next thing I want to talk about to everybody is something that we haven't covered that much, but if you enjoy this and you enjoy this analysis, please let me know, because I definitely love talking about this cross-currency stuff. So this is a cross-instrument analysis where we're basically taking the S&P 500 and we're taking the Australian US dollar, and we're saying, is there some kind of significant correlation between both? And there certainly has been since the crash. So on the 20th of March, both the S&P 500 and the Australian dollar increased in price, and they've continued to do so and continued to be very correlated since then. The importance of knowing this correlation is then you can do analysis on that particular instrument to see if it gives you early warning signs about what the market might be doing. So let's take a look now at the Australian US dollar, and here it is. So the Australian US dollar made a double top where basically the resistance was reached twice. We saw a shooting star candle, intervening trough break, and then it's come back and retested the intervening trough where that's acted as resistance and sold off again. Now, where are we right now pre-market? We are at a critical juncture where we're at 68 cents on the Australian dollar. And if it breaks under 68 cents, then we expect it to go and fill to the next level. Where's the next level? Previous resistance will act as support, and that will be around this 200 moving average on the 4-hour. The significance of this is because that generally markets like to fill gaps or fill zones, and they can move quite quickly to those zones. So if we saw the Australian dollar weaken towards this area, what do we think could be happening to the S&P 500? Well, of course, it would also be weakening, and it could give us signs that when it hits this level here, that we might be bottoming out on the S&P 500 at least temporarily. It's very interesting cross-currency analysis, and we've got a little bit more when we look at the dollar index. So you would have heard me at the beginning of this video talking about risk on and risk off. So when we have risk off sentiment, generally the dollar or the US dollar index increases. And that certainly was the case last week with a nice bullish rejection candle off the 200 moving average, simple moving average that is, and it became quite bullish, and we obviously saw risk off sentiment coming back into the market. The significance of this is that if we are seeing a change of trend on the smaller timeframes for the US dollar, it can show us that money is coming out of indices and going into this so-called safe haven. So let's take a look now at what's happening with the US dollar index. So one of the things that instantly I see is that there were previous resistances here at the 97, and the market has blown through those and is now hovering just above, where the resistance is becoming support on the smaller timeframes. Another thing is that the 2050 moving average are getting closer together, ready for a cross, and that they'll act as dynamic support. So the market may not be able to get under that level because the 2050 is acting as dynamic support along those lines. Another thing that you want to be looking at when you're looking at the dollar index is where to next for the dollar index. So if it continues its bullish momentum, it will most likely go and fill the zone similar to the Australian US dollar. Remember, if we have risk off sentiment and the US dollar is strengthening, if we can find where the US dollar is weakening, then we can potentially be timing that with the S&P 500. Here over on the left-hand side, we have the 98.20 zone. And what I would think is between the 98.20 zone and this previous supports around 98.80, we should see the US dollar find some form of resistance. The other thing that will happen at the same time is that the 200 simple moving average, an incredibly important simple moving average, will slowly come down to this level and act as dynamic resistance. So this is key when we're talking about putting a price on the S&P 500, at least for the shorter term. So let's go back to the S&P 500 and talk about the 4-hour chart, where a lot of the action is happening. So pre-market, we have seen the market get under 3,000. Time will tell whether it can hold that level, very key level. And it reached that 29.50 that we've been talking about, where previous resistance is acting as support. And of course, that is role reversal as that first key level on the market. The next point though is hard to pick. Where is the S&P 500 going to go next? Well, one of the things that I've been looking at is that you take the distance from the top to the bottom, and generally what the market will do is it will try to move in that same direction with a very similar distance. And if that was to occur, we would see price coming to the previous lows here at around 27.80. And I love it when I see this with technical analysis. Obviously, we're playing statistics when we use technical analysis. Statistics are something that we need to be as right as we can be, and we want to use as many reasons as possible to be in a trade or be in an investment scenario. So when you see that kind of movement happen again, that's excellent. You draw a zone between that 2800 and 2780. Another thing you'll want to do is you'll want to then go to things like the higher time frames and see how the market has interacted with that zone. So clearly it was support before breaking up, and the market had difficulty getting through that 2780 to 2800 zone. Even over here in August of last year, the market found support at 2800. And if we zoom out some more, the market found resistance during the initial crash over here in September at the 2800. So the 2800 is clearly incredibly key for the S&P 500, and it's where we would think the market would move to next if it was able to get below that 2950 zone. It generally would try to fill that zone or that gap. Another thing that everyone's going to be talking about is that the price is trying to get under that 200 moving average and close below it. The 200 moving average acts as amazing dynamic support and dynamic resistance for the S&P 500. So if the S&P 500 is able to close below, we see all of those other things happening on the instruments like the Australian dollar and the US dollar, and they will all happen at the same time. We're starting to put together a very good story for where this market could move to next. If you enjoyed today's video and you enjoy our content, and also, of course, if you want to be in the winning or the running to get that $500 Australian prize for your trading account, then make sure to subscribe and hit the bell. Comment down below also if you enjoy this content and you want to see more of it. I'm trying to still get an identity for exactly what people want on this channel, and I like to cover a bit of everything, but I do want to have some main staples that we go to regularly, and technical analysis is certainly one of the fields that we believe we can add a lot of value to your investing knowledge with. Thanks everybody, and happy trading. Goodbye.